6 o'clock.
Yes.
Open us up with a word of prayer.
Sure. We'll bow our heads. Heavenly Father, we humbly thank you for all the blessings you bestowed upon us. Thank you, Lord, for this day. Thank you, Lord, for this Uplift series and our guests that are presenting to us today. And definitely, Lord, God bless all the brothers of the Omega Psi Phi Fraternity Incorporated. Amen.
Amen. Thank you, Brother Spearman.
You're
Good
welcome.
evening, everybody. Again, my name is Alex Jones, and I'm the boss list of the Epsilon Iota chapter of Omega Psi Phi Fraternity Incorporated. On behalf of the chapter Brotherhood, I would like to welcome you to our continued Omega Uplift series, which focuses on COVID-19 and the impact on the Black community. Tonight, we'll be speaking about finances during this time. We have an excellent panel. We have Mr. Devin O'Nalty, Ms. Patrina Dixon, Ms. Kamisha Janey, and Mr. Nasiki Reed. I want to thank everybody on the panel for coming and agreeing to speak with our community during these times. Since the founding on the campus of Howard University in 1911, we have been guided by our four cardinal principles of manhood, scholarship, perseverance, and uplift. Omega has played a vital role in the social and economic growth of our country and enhancing the lives of African Americans. We operate under 10 nationally mandated programs, which are centralized around issues in our communities. And as a chapter, these programs address social action, education, health initiatives, and voter registration and mobilization. We also have a host of other initiatives that focus on the relevance and the progression of the African American male and other communities of color. I know we're eager to hear from our dynamic presenters, so at this time, I would like to introduce our moderator for the evening, Brother Kevin Walton. Brother Kevin Walton serves as our Social Action Chair. He also serves as our District Scholarship Chair, and he is also our District Region 1 Life Membership Foundation Board, in which he is in charge of the Grants Commission. Brother Walton is no stranger to the greater New Haven area, as he is the head basketball coach of Wilbercross High School boys basketball, and he serves in the NAACP and is also the co-founder of Storytellers. We hope you find this series tonight uplifting and informative, and I'd like to turn it over to our moderator, Brother Kevin Walton.
All right, good evening. Thank you, Brother Bosilis. And good evening and welcome everyone to our second in a series of Uplift community conversations. As Brother Jones mentioned, we have some financial experts who are going to share some information around finances during COVID-19 and beyond. So just a little bit about the process. Each presenter will have 15 minutes to do a presentation, and then there will be a 5-minute question and answer period with each panelist. At the end of the session, we will take more questions and answers. Our chat room will be open, so please, throughout the presentation, make comments and ask questions, and we will try our best to get to all the questions this evening. So with that said, we are going to get started with our first presenter. Mr. Devon O'Nalty is a human resources professional with 10 plus years of experience in unemployment and resume writing. And he will be talking to us this evening about unemployment. So Devon, we're ready for you.
Thank you, brother. Appreciate it. So good evening, everyone. Thank you for joining our Uplift series here. I'm honored to be a part of this program and being able to deliver some information about unemployment insurance. Now, I want to just make a caveat here before I begin, is that most of my experience, rather, if not all of my experience regarding unemployment is roughly in Connecticut. So if you don't live in Connecticut, some of these questions or some of these responses may not apply to you directly. However, it's important to know that most of the application process and such is more or less consistent throughout all the states. So as we all know, unemployment has been a very big question for our community. What's going to happen with it? How long will it last? How much can I get? I can't get through to my local state or Department of Labor. What can I do to move forward? So here in Connecticut, I know, having contacts with the commissioner and deputy commissioner, I know that we've been doing an excellent job processing our claims. Now, that's not to say that all claims are being processed in a timely fashion. However, most claims at this point have been processed or will be processed within a 48 to 72 hour period. Now, that timeline may not hold to be true for you particularly, because there may be other issues that may drive the delay in your processing, whether that be verifying your last name, verifying the wages that you may have, whether or not you are a part of the gig community and don't have any wages that are reported through the Department of Labor system. So there's a number of different things that could potentially cause delay to your unemployment. But for those of you who have filed or who are continuing to file for benefits, just know that the extra $600 benefit that you're going to receive or that you are receiving is good until the last Saturday in July, right? So a lot of folks may say the end of July 31st, but unemployment break works on a weekly basis. So the last Saturday in July is when, as of right now, you're going to receive that additional $600 benefit. Now that $600 benefit is on top of whatever you qualify for. Typically speaking, in most cases, they take the 4 of the most recently 5 completed quarters to calculate how much you're going to receive for these unemployment benefits. So for example, if you filed in March, they are taking the 4th quarter of 2018, 2019, all of 2019 to calculate what your weekly amount is going to be. And they take the 2 highest quarters, add them together, establish an average, and then divide that amount by 26, right? And the reason why it's 26 is because here in Connecticut, you were able to apply for benefits for 26 weeks. Now that's important to note because there is a difference between the balance of benefits you have, which is based on 26 weeks times your weekly benefit amount, versus the 26 weeks or benefit year. Now, typically speaking, most folks, when they're on unemployment, only file for benefits for 26 weeks. So that is before their end of their benefit year, because the benefit year, as you know, is for the entire year. However, in most cases, especially with today's times, with over 40 million folks who have filed for benefits, those individuals who are applying are typically filing every single week. So they're going to exhaust their benefits before their benefit year. Now, there's been many talks about Congress and what they're trying to do and what plans are, but to this day, nothing has been solidified and no extended benefits has been confirmed, whether or not you're going to receive additional $600 beyond the last Saturday in July. Now, the process in Connecticut, is relatively simple. What you would do is go to filectui.com and file for your benefits there. Once you arrive at that website, you would click on the purple button and follow that process to file your new claim. Now, that's the same process if you were to reopen a claim that you previously had within the last year. When you file your weekly continue claims, you would choose a green button and use that process. Now, I'm sure this process is very similar across many states across the country, but here in Connecticut, we simplified it by just having the landing page and then directing you to certain avenues. Now, another part of the questions that I often get is, well, what about taxes? Is unemployment taxable? So unemployment is a taxable insurance. I say insurance because it's called the Unemployment Insurance Program. So it is a taxable program, and it's a flat tax of 13%, 10 of which goes to the federal government and 3 goes to the state. So I always recommend, now I'm no CPA, I'm no tax professional, but I always recommend that you elect to have taxes taken out of your benefit, because if you don't pay now, you will certainly pay later. Now, the $600 is also a taxable piece as well. So I know here in Connecticut, the maximum unemployment rate is $649 before any dependents, before any taxes. So the rough maximum you can receive is roughly $1,200 before taxes. Right now, we have dependents here in Connecticut. It's $15 per dependent, up to 5 dependents. So you can receive probably up to almost $1,500 per week, depending on your situation, depending on taxes, all that stuff. But again, my recommendation to anyone here that's a part of this series is to take taxes out, because again, if you don't pay now, you certainly will pay later. Now, the big thing about unemployment, as far as what I've seen, as far as questions are, well, I filed for benefits. I haven't heard anything yet. I can't contact anyone. What can I do? So I've offered my services to a lot of folks who I've connected with, either Facebook or Friends of Friends or LinkedIn. I do have contacts that still work with the Department of Labor that I've been able to connect with and assisted individuals who may be stuck or not being able to receive any payments or whatever the case, and try to get them to get their payments in a timely fashion. So if you are one of those individuals who are like, Devon, you know what, I'm stuck, I can't get through anything, nothing's happening, reach out to me, connect with me on LinkedIn, friend me on Facebook, and I'll be happy to help you. More important than that, I'm also part of a group called Connecticut Comeback, where we're trying to assist folks with resume writing and just trying to get their job readiness in place once we all return back to work, whatever that might be. So I know that wasn't quite 15 minutes, but I wanted to give a brief overview and leave more time for a Q&A. So I'm sure there's questions about the unemployment process, what that looks like, how that works for you or someone else you may know. So I want to open the chat up for any questions about unemployment.
All right. Hi, Devon. So we have one question in the chat that so far right now, and would you pay for your taxes per filing? So I think there's wait. Would you pay your taxes per filing?
Yeah, I get the question. So what happens typically is you receive your 1099-E form, right? So that's a form that confirms how many weeks or the total amount of wages you receive from unemployment, and that goes against however you're filing, you know, single, married, whatever the case. So again, I can't say to a T, because I'm no CPA, that you're going to actually have to pay taxes. There's a lot of variables, as we all know, when you file taxes. But again, I always recommend that you take taxes out now, because you don't want to have that tax bill later, especially with the stimulus check being an advanced tax credit and other things that are going to potentially affect how you receive your taxes next April, whenever you file. So I see there's another question. What about those realtors? Very good question. A lot of questions coming up now, which is great. So realtors are in a very special category. So I'm gonna lump realtors into any sales professional, right? So car salesmen, realtors. I can't think of anything else off the top of my hand, but so if you made a sale, right? You were a realtor, you made a sale in 2019, and you received payment for that sale in 2020, let's say April 2020. That payment you received does not affect anything you receive from unemployment. Now, what does that mean? Now, weekly, the unemployment asks, have you received any payment of wages, vacation pay, severance pay, or any other pay within the previous week in which you're filing for? Now, a typical person would probably answer yes to that question, but I'm telling you right now, you are safe to answer no if you're a realtor or any sales professional who's received payment for work done previous to the week in which they're filing for. I'll give you a perfect example. So we just had the end of the last Saturday of May, this past weekend. So if I was a realtor and I made a sale back in January of 2020, but I received payment for that sale the same week in which I'm filing for, I do not have to report it because I actually earned the money in January, right? And that's important, the earned piece, right? Because you want to make sure that anything you're reporting week to week is what you've earned for that previous week in which you're filing for, right? So it's important that if you earned it previous to the week you're filing for, it does not affect your benefits. Now, so the other question would be, well, what if I did earn money during that previous week? Here in Connecticut, what they do is they take 2/3 of your gross reported earnings and then subtract that from your qualifiable weekly rate. So for example, wait for $200 and you made $200 from your part-time job or wherever else. So they'll take 2/3 of that, or $133, subtract that benefit rate, subtract it from benefit rate, which would be $77, and then pay you the $77 before taxes plus $600, right? So that's how that kind of works. And again, when you answer those questions in regards to you filing for benefits, that question in Connecticut is number 6 and number 6C to be more precise. And you would answer who you worked for, how many hours, and what your gross earnings for that week. And then they would do the calculation from there. Another question, no matter when your unemployment starts, does it automatically stop at the end of July? Great question. So no. So typically speaking, anyone who's filed for benefits between I want to say March 29th, I believe is the last Sunday in March, through July, I want to say it's the 25th, is the last Saturday in July, are able to receive the additional $600 benefit. However, before March 29th and after July 25th, if you're still eligible to receive the 26 weeks of benefits, you are still eligible to receive those benefits, just minus the $600. So the only thing that's stopping on July 25th, assuming this is the last Saturday in July, is the additional $600. Everything else you can still receive.
Is the state looking for people who are double dipping, meaning receiving pay, but also still filing unemployment?
So I'll be honest, right now, no, they don't have the capacity to do that. So I know the Department of Labor is hiring 20 intermittent employees over the next 3 months. And their primary focus is to process claims and get things started for the unemployment system. But as of right now, no, they don't have the capacity to look for or to search for overpayments. Now, that's not to say that you won't get that overpayment bill in the mail saying, we know you worked here, you didn't report any earnings, and you now owe us X, Y, and Z. Now, that's an important letter because not only can they take your future unemployment benefits, but they can also take your tax return, both state and federal. So if you happen to be working part-time or full-time and just not the same number of hours, I encourage you strongly to report your earnings, because once you receive that bill, it's going to come at you pretty hard and when you least expect it. You know, I know the next brother, Nisiki, works for the Department of Revenue Services, and I know there's some different applications there in regards to Connecticut state and federal Connecticut state taxes. But just know that the Department of Labor does have access to both your federal and state tax benefit. And if you do happen to owe a benefit that you're not paying on, they do have the authority to take that money first before you receive your benefit.
Okay. And one more question. What happens if you become re-employed at a lower wage? Like, I'm guessing they're asking, would you still?
No, I get it.
Okay.
Yeah, I get it. So that's a good question. So a lot of folks have asked me that question as far as working part-time, lower wages, whatever that may be. So the rule of thumb that I always encourage folks to understand is, okay, so let's say your lower wage is $10 an hour, right? Let's say 10, well, $10 an hour, easy math. So if your normal wage is $20 an hour and you reduce by 50%, typically speaking, you are still eligible to receive a partial paycheck, right? So what I was talking about before, working that part-time, what you would do is report your earnings for that particular week. So again, if your weekly benefit amount is $300, you made $10 an hour times 20, so $200 a week. Unemployment would subtract $103 from your unemployment. So you would still be eligible for a partial paycheck. So I would encourage anyone that's being either reduced, working less hours, whatever the case, to still file because you don't want to be eligible to receive a payment. And then once you do report your earnings properly, they will pay you whatever you're eligible for.
Okay, I'll turn it back over to Kevin. Thank you, Devon.
You're welcome.
Great. So thank you, Devon. That was great information. And Devon has agreed, like all of our panelists, to stay on at the end of this program to answer any questions. So if you still have questions for Devon, you can still type in our chat, and we encourage you to put comments in the chat, ask questions. Our experts are here and they're more than willing to share the expertise with you. So again, thank you, Devon. With that, up next, we have Patrina Dixon, who is a personal financial expert and author of founder of It's My Money. So welcome, Patrina.
Welcome. How are you?
We're great. Thank you. Thanks for being here.
You're welcome. I'm going to try to bring up my PowerPoint now.
Okay.
Can you all see it?
Yes.
Great. So good evening, everyone. I've been asked to come to talk about tips to manage your money during this pandemic. The topics that I'm going to cover are budgeting and savings. So let me tell you a little bit more about myself. So as you heard, I am a personal finance expert and an award-winning author. In addition to that, I own my own financial services company called P. Dixon Consulting. At P. Dixon Consulting, we work with individuals one-on-one to help them manage their money, specifically in budgeting and savings and increasing their income through side hustles. I'm also a certified financial education instructor and have my financial management certificate from Cornell University. I also am a proud mom and wife, and those are my pictures of my daughter and my husband. I always bring them in because they're huge supporters and they're why I do what I do. You see the podcast and mic over there. So like you all are on the session today, I like to give personal finance information to all that are interested. So if people are unable to work with me one-on-one, I host a podcast that airs a couple times a month where I give free financial information. So if you can't afford to pay, at least you can listen in to sessions like this, as well as a podcast to get information to help you become more financially astute. So let's start with budgeting. So I'm going to cover 4 things when as it pertains to budgeting. And the first is, what is a budget? What I hear people say most is, I don't like to do that because it takes a lot of time. I'm not going to be restricted to what I can pay for, what I want to do. I'm grown, I make my money, I can do whatever. Budgeting is not intended to be restrictive. Budgeted is simply telling your money where to go. Just that. It's telling your money where to go, because at the end of the day, it's going to go somewhere. You're going to spend it, use it frivolously, pay bills, do whatever you're going to do. It is better for you to tell it where to go instead of after you're spending it, figuring out what did you do with it. So let me give you a few tips. Tip number 1 is, if you don't like the word budgeting, don't call it that. Call it spending plan. Call it managing my money. Call it whatever you need to call it. Just make sure you do it every time you get income. So if you get income more than 1 time a month, if you get various streams of income, you need to do it every time. The second tip is, make sure you write down all of your income. So a lot of us, like myself, we may work a 9 to 5 and have a side hustle that brings in money. So you want to make sure that you write down all of your income. If you're an entrepreneur, if you get paid various different ways, you want to make sure you write all of that down, because in order to budget, you have to know what's coming in. The second tip is, you want to make sure that you write down all of your expenses. And I mean all of them, not just those that have due dates. Oftentimes clients will say to me, okay, I have mortgage, I have light bill, I have gas bill, I have car insurance, car payment. But if you have a car and car payment and car insurance, most likely you have gas that you need to pay for. So although that does not have a due date, it's an expense that you pay on a regular basis. So you have to make sure that you include all of your expenses. The other thing is, you want to make sure that saving is a part of your spending plan. So that may sound a little weird because it's not an expense in the way that you would think, but you have to make sure you're paying you. So include a line item to save as a part of your budget. So let me say that again. Include a line item to save as a part of your budget. That should be the first thing that you do as a part of the saving plan that you're going to create. Now, there's many different ways that you can budget. I like the age-old pen and paper. So I created very useful and helpful budget sheets, and I have budget envelopes. Budget sheets you can get off my website. My website is listed there. You can go there and download a free budget sheet. I have 2 different kinds, and you can get the one that you want. One is pre-populated with monthly expenses that people typically have every month. So very common: rent, mortgage, car payment, life insurance, all of the various different things that we pay a month. Or there's a blank one that you can populate with the things that are specific to you. I also have budget envelopes that are available as well. Budgeting apps is another way to budget. Now, some of my financial friends may not like when I say this, but I do not encourage the use of budgeting apps if you have never budgeted before. So let me tell you why. Budgeting apps are really good with telling you what you did with your money and suggesting what you do with it next. If you've never budgeted before, I encourage you to get in the habit of budgeting using age-old paper and pen. Once you get in the habit of doing that and your funds and bills and various different things are being done through a bank account and however you're paying them, then you can use an app and connect those various different accounts to those apps, and then it can help you that way. So start off with pen and paper. Pen and paper could be the budgeting sheet for my website, or it can be literally pen and paper. The key is writing down all of your income and writing down all of your expenses. A couple budgeting apps, because I always get this question, a couple free ones are Mint and Pocket Card. Those are free. There's a bunch of others that have nominal monthly fees associated with it, like You Need a Budget, or commonly known as YNAB. Now, one would say, if I'm learning how to budget, I'm trying to get my expenses in order, why would you suggest an app that has a nominal, even nominal cost associated with it? And you have to think about it like this. I told you there's a couple free ones, but there are some that have an expense tied to it. If you've never budgeted, you don't want to do pen and paper, app is the way that you want to go. You may think about it, if one costs $199 a month times 12, maybe that is an expense that I need to take on in order to keep my money in check. So I'm sharing various different options, and you would need to make the choice that's best for you. Now I'm going to move on to savings. Savings is something we all should do. I'm going to hit 4 different topics as it pertains to saving. The first is your why. Why are you saving? Are you saving to establish or pad your emergency fund? Are you saving because you want to buy a house? Are you saving because you want to fund your kids' college? Whatever the reason is, you have to know why you're doing what you're doing. Your why always brings you back to what you're doing, and then usually has you do the habit of actually following through and executing. So it's important to understand your why. This time, if no other time, this coronavirus or COVID-19, this time that we're going through, whatever you want to call it, this is the time where it says, if you did not have an emergency fund or were not set up properly, you could be in a little awkward situation, right? So it's important for, if you, whatever it is that you're trying to save for, if you don't have a why and you don't have an emergency fund, let that emergency fund be your why. This is what you need to do. So if anything happens, you have a place to go. So then the question usually becomes, how much should I have in my emergency fund? At a bare minimum, 6 months. Then the question usually is, how do I determine what that 6-month amount is? What's that total sum? If you go back to the budgeting exercise and you now have come to the amount that you need every month for your household expenses or for your total expenses, that is the dollar amount times 6 that you need. So let me give you an example. $2,000 is the amount your budget has told you is your living or monthly expenses. Times that times 6, $12,000 is what you need. This is just as simple as that. Once your emergency fund hits that amount, then you actually can then start saving for the next thing, maybe even in a different account. The other key thing is spend less. So there's a famous quote from Warren Buffett, who's a billionaire and soon to be trillionaire, I read, right? So you want to think about things with people with a lot of money, what they do. One of his quotes is, don't save what is left after spending, but spend what's left after savings. So think about that. A lot of people spend and then figure out what to do next. They're saying, I live paycheck to paycheck, but yet there's a lot of things that they're doing that they could pull back from so that they can put some money into their savings. So it's really important that you take heed to that quote. I encourage you to spend less on things like you've learned during COVID. And I'll give you an example. A lot of us, so as you see me with these braids, first time I've ever had box braids in my hair. Some of you have probably cut your hair for the very first time, for the men that are on the phone. Some of us don't have our nails done because we couldn't go to the nail place. So if you think about that, a lot of us are saying we are unable to do those things. But if the doors were open for us to do that, we would spend our money on those things. So what did we do with that money we saved? Did we put it in our savings? Did we put it towards debt? What did you do with that? when we completely reopen, some states, I'm not sure where everyone's coming in from, some states are already open, some states are gradually opening, but when we're able to go to all of these places, will you just start spending the way you were before? Think about that you've survived since February or March to now without doing those things. Can you, I'm not saying not do them, but can you do them less than you have before? So that's the way to think about your savings. The next is, what's the best vehicle to save? I encourage online high interest savings accounts. Online only, online only. And I stress that because some people think, well, my bank has an app and have the ability for me to go online. That's not an online only bank account. Those are banks that still have brick and mortar, so therefore they have rent and all those types of expenses. Online only savings accounts can afford to give you higher interest because they don't have all of those overhead expenses. So some of my favorite are Capital One 360 Performance, Ally, American Express, and Marcus by Goldman Sachs. So let me tell you give you an example of why those are better than your typical commercial bank. So let's just use Capital One. Right now, their interest rate is at 1.30%. And Bank of America is at 0.03%. So let me say it again, 1.30% is what Capital One Performance is at, and Bank of America is at 0.03%. So if you had $100 in Capital One, you would have earned with interest $1.30. So that would be $101.30. If that same $100 was in Bank of America savings account, you would have $100.03. So let me just say a little bigger amount. So let's say $1,000 in Capital One at 1.30%, you would have earned $13. So you would have $1,013. If you have that same $1,000 in Bank of America at 0.03%, you would have earned 30 cents. So 1,030 cents. So I would prefer to have the 1,013 than the $1,000.30. So just think about that. Think about that over a year. So that's just simple interest that the bank pays you. So then when they compound that and take all of the money that you've earned, so you've never changed 1,000, let's just say, and then at the end, they will give you 1.30 on the total amount you have in the bank, not just the 1,000 you put in there, the money that you put in there, plus the money that they have given you. So I call that free money on top of free money. So I like free money. I know usually when I'm in the room, I say, raise your hand if you like free money. If you like free money like me, this is the way to go. So is that the only way you can save? Absolutely not. So remember, with saving, you have to have a why, spend less, look for ways for which you can reduce your spending through looking at your budget, find the way that your money can grow the fastest, and then lastly, just like with budgeting, I said, pay yourself first. So that means if you're employed, you have, I'm sure, the bulk of your money going into a checking account via direct deposit. Most of those companies allow you to direct many different ways, so different accounts. I would encourage you, if you do not have an online only savings account, to open one of those, get that routing information, go online or go to your HR, however you need to do it, give them the routing number for this new high interest savings account, and direct a portion of your savings to that account and forget about it. So automate it and forget it. So that's what I would encourage. So always budget and always save. And the amount that you have automatically going to the savings account should be something that you can maintain and be consistent with. So just because you may have gotten a stimulus and you have a little bit extra money, don't start to like say, okay, I'm gonna do 500 a month if you've never done that before. Maybe you should start with a lesser amount, and then if you're able to maintain that for a period of time, then increase that. So again, always budget every time you get paid, and make sure that you pay yourself first by way of automating it into a high interest savings account. So I'm not sure the time, I didn't have a clock, but that's the information for which you can reach me, and I'll leave that up while I'll take questions.
Thank you, Ms. Dixon. So have a couple of questions here. How do you do a budget if your pay is commission based?
So, great question. I would encourage you to, so it depends on how often you're getting commission. So at the end of the day, your expenses are what they are. The way that you get income in may vary for you. So that's even more of a reason why you need a budget. So you need to first understand what you're paying out. And if your commission varies or there's a lag in between you're getting money on a regular basis, then you have to budget for that. So that's why it's important to understand, okay, I got a commission this time. I paid my bills. I may not get another commission check until after my bills are due again. So therefore you got to maybe double up with the first commission check. So it's really important to look retrospectively so you'll understand how you need to do things going forward if you've never budgeted before.
So would you recommend, like, you know, getting like a job that's, you know, having a job that's commission, but having probably like a part-time job that's like a base salary or something like that to help towards that?
Well, so I am a huge fan of more than one stream of income. So yes, and yes, and yes, for many different reasons, not just because of budget. So yes, if you are able, so I'm not going to say I'm not a fan. When I say a side hustle or another stream of income, if you have a job that you're working and you say you love it, I encourage you to earn income from things that you enjoy doing. Like, this is what I'm doing right now. I earn income from this, but I love doing this. So whatever you love doing, find a way to monetize that. So in your situation, I would encourage you to get on a path or figure out a way that you can get money on a regular basis to help you keep in line with the bills that you have to pay on a regular basis. If you have huge commission checks, which some people do, so that's why I'm not going to say get another job. You may be making more than all of us on the phone if your commission is, you know, that great. So you just have to know when you get that in, look at how often you get it, and then figure out how you need to pay your bills that you have aligned. You can also work with your creditors or people that you pay on a regular basis, companies you pay, and make sure that your cycle for which you pay align to when you most frequently get your money.
Okay. All right. Next question is in regards to online high interest savings account. So one, are there any Black owned banks that you could put your savings in, which is like, you know, in the form of the online high interest savings account? And do online high interest savings account have like monthly charges, you know, like the traditional brick and mortar banks? Do they come with monthly charges too?
Great. I love both of those questions. So I am not aware. I'm not going to say no because I don't know this for sure. I know there are some Black owned banks, but most of those that I'm aware of do have brick and mortars. So I think One United, I can't remember the name of them all, but the ones that I know, they're geographically located, are not online only savings accounts. If anybody knows anything different, let me know. So that's the answer to that. As far as your other question regarding fees, and I should have mentioned this earlier, most online accounts don't have regular fees. What they may have, and you need to check this and do a compare. You can go on nerdwallet.com to do a compare, or bankrate.com. But you want to ensure that you're putting in enough. So some banks will say you need to have a minimum of X, whatever that is, $250, $25, whatever. They have different amounts that you can't go below. So there will not be a fee if you don't go below this amount. There may be there may be transactions that incur fees, but a regular monthly fees, most do not have that. That's another beautiful thing for having an online only savings account.
Okay.
So some may have, and let me make sure I say this because I didn't say this. Because they're online only, a question may come to your head, well, how do you get the money over there? Because I can't go into the bank and establish this account. You do need to connect it to another account so that you can transfer money in and money can be transferred back into that account. The reason why this is, again, a feature that I like is because it's delayed gratification. So whatever it is you were going to go and spend that money on, it makes you think, you know, why you have to wait 24 to 48 hours to get that money from that account into another account. Like, did I really need to spend that? What was I going to spend it on? It makes you rethink that. So potentially when you get it back, you don't no longer want to buy whatever it is you were going to buy, and then you put it back in there. So it's not an easy way for you to run down the street to the ATM or to the open bank to get that money. So that's why it's supposed to be the automated and forget about it account.
Mhm.
It's a separate savings account, not the only savings account.
Okay. So I'm thinking that the reason for the online high interest is just basically the difference in rates that you get every month in regards to the brick and mortar, where you say you had the 1.03 and the 0.03 with Bank of America. Someone in the platform said that One United Bank is the largest Black-owned bank in the country, and is headquartered in Roxbury, Massachusetts. But one last question that we have for you is that, have you ever negotiated an interest rate down on a credit card? And if so, what are some of the tips that you could give?
So I know the person that's coming behind me is going to talk about credit. So I'm
Okay.
not sure if that's going to be included into her presentation. So I don't want to do that in case that's what she's going to talk about. If that's a topic that she doesn't touch and you want to ask that question near the end, we can
ask that question later.
Or you can reach out to me as well. My website is here. My email is on the website.
All right. Thank you, Mrs. Dixon. And we're going to turn it over back now to our moderator, Brother Wharton.
Great. Katrina, thank you. That was great information. So far, we've heard some great information, and we promised you that you would. So next up, we'll keep this thing rolling. Next up, we have Kamisha Janney, better known as Capital Credit Mish on social media. She's a licensed realtor and a certified credit professional, specializes in helping people establish business credit and improving their personal credit. So we'll turn it over to you, Capital Credit Mish.
Hey everyone, how y'all doing? I'm gonna also have a PowerPoint presentation, so I'm gonna share my screen now. Okay. All right, so there we go. Can y'all see the screen good? We good? Everybody can see the screen?
Yes.
All right. So what I'm going to be talking about is credit during COVID and what you guys should know. But before I get into everything, I definitely have to start off by giving a special thank to the brothers of Omega Psi Phi for this event. You guys are all about community service and economic justice. And thank you for doing this in a time like this when we really need it. So thank you for all that you do in general. I'm truly honored to be a panelist for this event. Thank you for having me. Next, I want to thank all the attendees on here as well. Shout out to all you guys. This is, I see we have a lot of people on here, and I'm definitely someone who is all about investing in myself and investing in my education. So I'm glad to see that you guys are about that as well. So as you guys heard, my name is Kamisha Janney. I am known as Mish the Credit Pro, Capital Credit Mish on social media. I'm the owner and operator of Financial Growth Strategies, LLC. I'm a licensed realtor and a certified credit professional, but most importantly, I am the queen of results when it comes to this credit level of life, y'all. I personally have close to an 800 personal credit score and close to a perfect business credit score as well. I help people rapidly increase their credit scores, acquire capital to fund their businesses, and I've helped people pay down their debts as well. Now, one of the things about me and what my mission is to educate the culture on how to leverage credit and a way to acquire capital and build wealth, right? And the reason why I think I'm so passionate about this is because, you know, growing up, I was taught, like, stay away from credit. Was anybody ever taught that? Was it just me? Like, was anybody told, like, don't do it, use cash, stay away from credit, right? And the reason why I think a lot of us were taught that and we were misinformed is because so many of us use credit as a way to finance a lifestyle that we really can't afford. And that's not what we want to do. We don't want to use credit to buy handbags we can't afford. We don't want to use credit to buy expensive shoes and belts and travel, right? We want to use credit as a way to leverage other people's money for sometimes little to no interest and make ourselves more money. So like they talked about in Rich Dad, Poor Dad, has anybody ever read that book? I love that book, but they broke down very simple: assets versus liabilities, right? Assets puts money in your pocket, liabilities takes money out your pocket, right? We want to use credit as a way to invest in assets, something that's going to put more money in your pocket. So now what I want to do, we're going to talk some money talk, but who can use credit to put money in their pocket? Real estate investors. If there are real estate investors on here, let me know, throw it in the chat box. Real estate investors. Business investors. If you're investing in your own business and somebody else's business, you can use credit as a way to do this and put more money back in your pocket. If you're a business investor, throw that in the chat box. Let's see. Truck investing. Trucking is $1 billion industry. If you're somebody that wants to get into trucking, you can use credit as a means to do this. This is the type of things, or these are the type of things that you want to use credit for. Now, important thing to note, right? In COVID-19, what you need to do to survive financially, and just in general, honestly, is you need 2 key elements, right? You need to be informed and educated. So that's one. You need to know what you're doing. You need to have the right information. And then once you get that information and you're informed and educated, the next thing you need to do is you need to take action. You have to execute. There's no point of learning all this stuff and being on calls like this if you're going to just listen and not take action, right? So that's very important. You want to be informed and educated, and then the next step, you want to make sure that you're executing. So here's what I'm going to cover with you guys today. And I'm sorry if I'm talking fast. I want to get as much information in as I can in my 15 minutes to you guys. So what I'm going to be covering today is understanding your score, updates with COVID, and improving your score, ways that you can improve your score. But before we get into all of that, what I'm going to ask you guys to do is 2 things for me. I'm going to ask you guys to grab a notebook and grab a pen. Grab a notebook, grab a pen. If you don't already have it, I want you to make sure you're taking notes, okay? Taking notes so you can apply this information, take some action. Grab a notebook, grab a pen. I'm going to drop some gems, and I need you guys to pick up what I'm putting down. Again, I'm talking really fast, so make sure you take some good notes so you can go back to it. And then the other thing is, you probably already have your cell phone by your hip. So the next thing I want you to do is take out your cell phone, go on Instagram really quickly, and follow me on social media. But in your search bar, capital_credit_Meech. On my social media, I give tips all the time on business and personal credit, right? This is free information that you can have. So if you're not already following me, I encourage you to follow me on social media. Capital_credit_Meech is my IG handle. And again, you can get more information on business credit and personal credit through my IG page. So in terms of credit score, what I'm going to be talking about is the FICO scoring model. There's many different scoring models out there, but FICO is the most common scoring model. That's what I'm referring to in this lesson. So the FICO model is how it works. There's a 3-digit number that ranges from 300 to 850, right? So your FICO score can be anywhere from 300 to 850. What your FICO score does is it helps lenders assess your risk and how risky it is in terms of, do they think that they'll be able to collect from you in the next 24 months? And what I mean by that is your financial situation going to change? What has your financial history looked like in the last 2 years? Are they comfortable lending you money? And the reason and what they want to know in terms of the next 24 months, the next 2 years, is the likelihood that you're going to stop paying that loan for 3 months or more. So they want to know, again, how likely it is that you're going to stop paying on a loan for 3 months or more. So why do they want to know about 3 months? I'll break it down for you. Very simple. Let's say Cousin Ricky hits you up and Cousin Ricky says, hey, cuz, can I get a loan? I'm going to pay you back on Friday. And you say, okay, no problem, Cousin Ricky. And Thursday comes. Cousin Ricky pays you the day before. You're like, okay, you feel good about that. Maybe if Cousin Ricky asks to borrow money again one day, you'll let him do it. He paid you back early. Same thing if he pays you on time. If he says, hey, can I pay you on Friday, and he pays you Friday, you feel good about that. You're likely to lend Cousin Ricky money again. But let's say Cousin Ricky says, hey, cuz, what's up? Can I borrow $100? I'm going to pay you back on Friday. And Friday comes, Cousin Ricky doesn't pay you. But Monday comes around, Cousin Ricky does pay you. Okay, you got your money. Cousin Ricky was late, I don't know though. Maybe I will, maybe I won't. He did pay me. Now use this scenario. Cousin Ricky says, hey, cuz, you know, can I borrow $100? You know, Cousin Ricky just lost his job. You know, Cousin Ricky borrowed money from your Aunt Susan and didn't pay her back, but you feel bad. You loan Cousin Ricky the money. Then a week goes by, you didn't get the money from Cousin Ricky. 2 weeks go by, 3 weeks go by, a month. And you calling Cousin Ricky, he's ducking and dodging your calls, he's not answering. You know what that means? Chances are you're not getting that money back. You can kiss that money goodbye, right? The same thing happens in terms of credit. If 3 months goes by and you have not paid that creditor, the creditor is saying, you know what? They know that they're not getting the money, right? So that's what they're trying to determine. Are they going to default on the loan? So here's how your score is evaluated. Poor credit is between 300 to 629. A fair credit score is between 630 and 689. Good credit is between 690 and 719, and excellent credit is between a 720 to 850. So based on those numbers and based on that score, this is the odds that the creditors believe that you're going to stop paying your debt for more than 3 months or more. Okay, so based on those numbers, if you're 800 plus, they believe the chances that you're going to stop paying for 3 months or more are 1485 to 1. Okay, 1480. So they feel good about that. They know, yeah, I can trust them. They're going to get that money. I'm going to get my money. If your credit score is between a 720 to a 799, the chances that they believe you'll stop paying that debt for 3 months or more are 659 to 1. If you're a 680 to a 719, the chances are 112 to 1. And if you're a 621 to 679, the chances are 47 to 1. And if you're 620 or less, the chances are now 15 to 1. So they know in that bottom group, 1 out of 15 people, they're not going to pay. They're not going to get that money back. They can kiss that money goodbye. So what does that mean? In order for creditors to make money, they have to upcharge you on the front end. And they have to upcharge everyone in that group. So if you're a 620 up to a 679, you're definitely paying higher interest. That's the way they make their money. They have to get their money up front because somebody in the group is going to default on a loan. They know that going in. So they have to charge you a much higher interest rate in order for them to make money. So now what affects your score? There's 5 factors that affect your score, but for the sake of time, I'm not going to get into all those 5 factors. I'm going to get into the most important one. But those 5 factors are payment history, which I'm going to go into, utilization, types of credit, age of credit, and increase. So that's what affects your score. But I'm going to talk about the one that has the most impact on your score, which are on-time payments. On-time payments have a 35% impact on your credit score, right? Now, on-time payments, if you pay a week late, that does not have an impact on your credit. I'm not saying that you should pay a week late, but what I am saying is on-time payments in terms of credit reporting, for credit reporting purposes, that's 30 days or later, okay? And the later the payment is, the worse impact it has on your score. So if you are 60 days late, that has a worse impact than if you are 30 days late. If you're 90 days late, that has an even worse impact, right? So what I suggest, if you're having financial difficulties right now due to COVID or any time, really, it's so important that you contact your creditors, work something out, ask about making a partial payment, see what can be done so it does not have a negative impact on your score. If you contact them, they will be very likely and more than willing to probably work something out, especially during this time, okay? So here's how delinquency affects your score. If the more recent the delinquency is, the worse impact it has on your score. So if you were delinquent in the last year, that has a 93% impact on your score. If you were delinquent within a year or two, that's a 60% impact. 2 to 3 years, 44% impact. 3 to 4 years, 33% impact. And more than 4 years, that's about a 22% impact on your score. So credit during COVID. What has changed? What should you guys do? Well, one major change with the COVID crisis is prior to this, you could access your credit report once a year for free through each credit bureau, right? You were entitled to one free credit report a year. As of April, you can now access your credit report on a weekly basis for free. Okay, so this is very new. You can now access your credit report for free every single week if you like. Now, here's where you get your official credit report. That's www.annualcreditreport.com. Credit Karma is not your official credit report. Please know and understand that. Credit Karma is just a monitoring service, and they make money off of getting people to sign up for credit cards, okay? I'm not saying it's bad, it's good monitoring, but your official and the only official site to get your credit report is annualcreditreport.com. Now, the report is free. However, if you want your credit score, they will charge a fee. Okay, also right now during COVID, you now have the ability to add consumer statements on your credit report. That was not available to you before. So what that means is, let's say you were late with the payment, you can now add a note saying, hey, this was a result to the COVID-19 crisis and a financial hardship I had. So that's something that you can implement, right? And the other thing, again, it's super duper important to contact your creditors regarding options. Some creditors may give you the option for deferment, some for forbearance. Some you can probably even just say, hey, can I get a lower interest rate? This is something that I've practiced prior to COVID, just renegotiating the terms of my loan, right? So this is a perfect opportunity for you to do that. So now I'm gonna get into ways to improve your score. So we already talked about paying on time. That has the most impact. If you don't wanna move backwards, you gotta pay on time, right? You have to do a point blank period. If you wanna see an increase in your score, you gotta pay on time. The other thing, keep your utilization below 30%. 30% is a lot of what the financial experts are gonna say. Me personally, I like to keep my utilization under 12%. I keep it at about a 10%, right? But utilization, you definitely gotta have that under 30%. The other thing is you can dispute negative items on your credit report. 80% of credit reports have incorrect information. So, and by law, if a creditor cannot verify your debt, they are required to remove it. So you can dispute items and get those negative items removed. Experience Boost. Experience Boost is a good way to boost your score. If you have a cell phone bill or you're paying utilities, if you're paying that on time, sign up for Experience Boost, and those on-time payments can now get reported to your credit. Things to avoid when trying to improve your score. You want to avoid opening up a lot of accounts. This is a mistake people make all the time. I know Credit Karma is suggesting cards to you left and right. Please understand, not that you can't apply to any accounts, but you do not want to apply and open multiple accounts in a short period of time, or it will have a negative impact on your score. The creditors are going to think that you are having financial struggle if you do that, right? Improper disputing. You want to make sure you know what you're doing when you're disputing an item. You don't want to delete unnecessary items, and you want to have certain things in place and the proper language on all your dispute letters. And the other thing you want to do is you want to avoid closing accounts if possible, right? Because part of credit in the scoring model is age. So the longer you have an account open, the better it is for your score. So if anybody wants more resources, I do offer a free credit improvement guide. Hopefully you guys followed me on Instagram. If you click the link in my bio, you can get a free credit improvement guide, right? If you're not on social media, if you're not on Instagram, you can access that free credit improvement guide on bit.ly/queen-of-credit-level-up. Again, that link is bit.ly/queen-of-credit-level-up, and you can access my free guide, 6 Steps to Improving Your Credit Score. And if you're someone that wants to take it up a notch and you want to go more in depth, I also have a money management bundle that I'm offering, where we go into getting those negative items removed, collections, budgeting, and debt pay down plans. And that's the same link. You can go to bit.ly/queen-of-credit-level-up and check out the special that I'm having for the money management bundle if you are interested. Questions. I'll try to get it all in and be respectful of everybody's time.
You were going. I was like, she's not trying to take a breath. All right, so we have a couple of questions here. The first one, what about the Experian app for your credit score? Is that accurate?
Yeah, the Experian is going to show you your Experian. It comes directly from them. So as long as there's a ton of different credit bureaus out there, and there's a lot of different credit models and things like that, but the top bureaus out there are Experian, Equifax, and TransUnion. So yes, that will show what you have with Experian.
Okay. The next question is, my daughter's a full-time graduate student and does not have a credit card. If she waits to get a card when she gets a full-time job, how long does it take to build her credit, assuming she misses no payments and does not go near her credit card limit?
How long does it take to, well, it takes 6 months of on-time credit reporting to build a FICO score. So just for you to even have a score, it's going to take 6 months. One of the things that I teach my students in terms of credit, and I'm gonna drop this on here for you, but one of the things that I do when I teach my students, my kids are all authorized users on my credit card. So they don't have access to the credit cards. They're all young. My oldest is 16 years old, so he's my oldest, but I have them all as authorized users. So by the time he's 18, he's already gonna have years worth of credit history established.
Okay, so you suggest putting younger kids on there on your credit card if you're a parent, and just, you know, they're not using it, but you're building their credit for them.
Right. If you do that, though, it's important that, you know your child and you are educating your child, because you don't want to have them at 18, they're still very young, right? And, you know, they can be like, "Ooh, I got credit, I got $5,000 limit," you know, and then, so it's really important, if you do decide to make them authorized users, you want to make sure that you are drilling in their head the proper way to use credit.
Okay. How do you negotiate an interest rate down on a credit card? The same question that Ms. Dixon said, you know, she wanted to push off to you, but how do you negotiate? What are some tips that you think you should get?
So all you do is real. So there's not like a big negotiation. If you have a good credit score, it should be a little easier. All you do is you contact your lender, you ask them to lower your interest rate. Now I'm going to be honest, you might have to make 10 phone calls before you get a yes. You understand? Like, I've done this personally before COVID, and not everybody's going to do this. Some are going to say no. But it depends on how far you want to take it. I think right now is a prime time. You'll get a lot more yeses. I've had some yeses. I've got a lot of no's also. But once you get that no, I would suggest, and it just depends on your time, taking it up. Who else can I speak to? I haven't gone through all of that. Sometimes I'm just like, you know, but if you have the time, even if you get the no, I would like to speak to a supervisor. You need to be in a position to negotiate. You have to have had that credit card maybe for some years. You have to have been in good standing. And what I would suggest saying is, hey, I've been with you for 7 years. You know, I've always made on-time payments. You know, I'm thinking about, you know, closing the account due to the interest rate. Don't close the account, but tell them you're thinking about closing the account due to the interest rate. Can you make it? Can we work something out? Research some other offers and say, hey, you know, this is what X, Y, and Z is offering me. Can you do that? Right? But regardless, once you're in good standing, you'll get balance transfers all the time. So for me, I hardly ever pay interest. I do a balance transfer. I get offers all the time. I transfer any balance to a 0% interest, pay it off before the 1 year or 18 months, whatever the term is, and that's that.
Can you explain that balance transfer component you just talked about, that you just mentioned? What does that mean?
So, you know, sometimes you'll get offers in the mail, right? For me, I don't, I keep my balances very, very low. I will use certain cards. Sometimes, honestly, I won't use them for quite a while. Now, they're like, oh, dang, you know, she's not using the credit. Now, you want to be careful, because if you go too long, they can close the account on you, right? So you have to like be careful with this, but I might go a couple of months without using a card. And so what will happen is they'll send me an offer saying, hey, we'll give you, 0% interest on your credit card. Use it. You won't have to pay any interest. And we'll do this for 1 year. So you have a whole year to use that card and not pay any interest. Sometimes it's even 18 months. I get 18 months sometimes. So what you can do in that case is you can transfer all your other credit cards balance onto that card that you have no interest. And then you just need to make sure that you pay that card in full before the term is up, or they will charge you like the interest.
Okay. All right. So another last question. I've never had a credit card, but when checking my credit score on a monitoring services, can my score go down? And also, if I increase the limit on my credit card, does that affect my credit score?
So typically checking on the monitoring sites is not going to have a negative impact on your score. It is only a negative impact on your score if it is what's called a hard inquiry, and that has a negative impact, but that's like one of the least amount of impact. So you want to just be, you can have a hard inquiry, you want to be mindful. And what was the part 2 of that? Does
increasing the limit on a credit card affect your credit score?
So increasing the limit, yes, that typically will be in your benefit if they increase the limit of your credit card, because now it's changing your utilization, how much you have available to you, versus what you utilize. What I suggest first and foremost, before I suggest, and again, I'm giving y'all all the info, but I suggest talking to your lender and finding out if they do a hard inquiry before you get that limit increase, because you don't want them to do the hard inquiry and then deny you of the limit increase, and then that has a negative impact of your score. So some lenders will say, we'll just do a soft pull. Okay. But some lenders will automatically increase it for you without you calling in. That happens often, where you don't have to call in. If you have really good credit, they'll just start like upping your limit. But if you want them to, they can, but they may want to do a hard check, and then you have to evaluate, is that worth it? How likely are you going to be able to get that increase? If you are able to get that increase, then it's probably worth it. If you're not, then it may not be worth it.
Okay. All right. Thank you, Ms. Janie. I'm going to turn it over back to Brother Walton.
You're welcome.
All right. Thank you. This is, we like we said, we promised some great information, and our panelists have not failed. So please keep those comments and questions coming. So last, and we're going to keep the program rolling. So last and certainly not least is our brother, Nasiki Reed. Nasiki is a certified personal financial educator and author, and founder of Reed Estate for the Mind, LLC. President of Wealth Generation Legacy, a nonprofit company. Both companies provide financial literacy education to folks of color across the state. So last and not least, Nasiki Reed.
Thank you. First and foremost, I would like to thank the brothers of Omega Psi Phi Fraternity Incorporated, especially the Epsilon Iota chapter, New Haven, Connecticut, for putting on this wonderful event. Last week we discussed, not last week, but our last session, we discussed, how COVID-19 affects the Black community. And there was so much information on that. And I just want to give it up to the brothers of Omega Psi Phi for putting on that event, because it definitely opened my eyes on to a lot of the health issues that are happening in our community. Secondly, I want to thank the panelists for coming on and giving us so much great information tonight. It was definitely needed. So yes, again, my name is Nasiki Reed. I am a certified personal financial educator and author. And tonight I'm going to be talking about investing during the COVID-19. It's almost like we're like, our panelists is almost like we're like the Jamaican 4x1 team, right? And I'm Usain Bolt coming down the stretch, to win it all. So that's how I kind of see like our lineup is just such a great lineup, a world breaking record, Jamaica all the way. So let me just start with, so stock market. So what is this stock market and what are investings, right? So investing comes in many forms, right? And there's investing in real estate. You have investing in the stock market. You have ETFs. You have cryptocurrency. You have the Forex market. You have all these different ways to invest, right? So ETFs are exchange transfer funds, and the Forex market trades in currency, like how you can trade literally in United States currency, Japan currency, things of that nature, right? But today we'll discuss stocks, right? So what's the number one thing that we hear all the time when it comes to just purchasing anything that we're going to sell, right? Buy low and sell high, correct? That's right. But I bet you a lot of us aren't doing that when it comes to investing, right? So what we tend to do, we tend to buy stocks, right, that are trending, stocks that are popular. And by the time these stocks are trending and popular, we're going to pay the premium for these stocks. So that's not buying low and selling high later. That's buying high, and we're hoping that these stocks are going to increase more so that we can sell it high at a later date and time, right? So one thing that one of my mentors, Stephanie, likes to say, she gives us a African proverbs, and it says the best time to plant a tree is 20 years ago, and the next best time is today, right? So yes, we may have missed out on, say Tesla, and I bring up Tesla because in 2018, I purchased Tesla stock at $225 a share. Tesla stock right now is worth $820.23 a share right now, which means that if I sell my Tesla stock, I would have a profit of $595.23, right? So that's what we're talking about, trying to find companies, right? And doing the research on finding companies that we can purchase these stocks low, let them grow and go high. But before we get into more of that, let's bring it back a little bit. So stocks are single ownership in the company. So that's what a stock is. If you don't know what a stock is, it's single ownership in the company. If the stock makes money, well, you make money. But if the stock loses money, you lose money. So it is a risk in purchasing stocks, right? In order to invest in the stock market, you need a broker. So like how you need a real estate broker to purchase, say, a house, you also need a stock broker to purchase stocks. Now, you don't necessarily need like the traditional stockbroker, like a person. There's actually a lot of apps that are out there that you can use, and these apps can be your brokerage, right? So these apps are, just to name a few apps, you can use, Cash App is an actual app that you can actually buy stocks through Cash App. I don't know if a lot of people know that, but you can. E-Trade is a good app to purchase stocks. TD Ameritrade, Webull, Robinhood, and Stockpile. And these are just to name a few of these apps that you can use to purchase stocks and things of that nature. Like with anything in our daily lives, right, we need to create a plan. What is your investment plan? Just like Patrina alluded earlier in her discussion about budgeting, right? You cannot go into investing without having a budget, because then you're just going to be throwing money and not keeping any accountability for that money. So you need to go in with a plan of action. Create a budget of what you want to spend and what you can afford to lose. That's very important. When you're investing in stocks, you want to make sure that what you're investing, you can afford to lose it. Because if you can't afford to lose it, do not invest in at all, right? So now in order, so like anything, again, you need that budget. So if you can afford it, invest in it. If you can't afford it, don't invest in it. Now, what are your goals for your investing? Are you looking to buy stocks and hold them long-term? Are you looking to invest in companies that provide dividends so that you can make a living off of the dividends? Now, what are dividends? Dividends are payments made by a corporation to its shareholders, and shareholders are people who own stocks. So a lot of people will purchase stocks in companies that offer dividends. And then when the company actually makes a profit and they want to share that, they send that dividend to the shareholders. Now, if you have enough stake in that company, your dividends could be essentially enough for you to live on. And that should always be the goal, right? You should have another form of income that's generated for you while you're sleeping, right? So that's what we call passive income. You want that income continuously coming in, and dividends provide that for you. So you can still, again, hold on to those stocks, but you still get paid for those stocks. So you don't have to sell them. The company is going to give you dividends while you're holding on to that stock. Now, are you looking to invest in companies that provide, I said that already. So take more risks. Now, are you looking to take more risks, purchasing stock before the earning report comes out? Publicly traded companies share how they're doing every period. So what earning reports are, every single publicly traded company has to do an earning report every quarter. And this earning report pretty much is the map of how the company did the prior quarter. Did they hit their goals, right? Or were they sure of their goals, right? Now, if a company like surpasses their goals, guess what's going to happen to that company's stock? It's going to go up. But if a company falls short of hitting their goals, then there's going to be a lot of skeptical people in the market. And they're going to say, well, I don't know if I want to invest in this company. You know, they put out a goal and they didn't hit it. So, you know, let me just, you know, stay away from this company. So, but the thing about earning reports, right, and why it's kind of risky, because you don't know per se what the company is going to report, right? So if you take a risk and say, you know what, Home Depot, it's during COVID-19. I think I went to a Home Depot and the store is packed. So they obviously are doing well, right? And I know Home Depot offers online services. So their online services have to pick up. So, well, and I know that their earning reports is coming out, say, Thursday. You know what? Let me purchase a stock at the price now. And then hopefully when their earning report comes out, it shows that they're doing phenomenal, and then their stock prices shoot up. And then obviously once it shoot up, you can then say, okay, do I want to keep it? Do I want to hold on to it? Or do I want to sell it and make my profit, right? So, but if you purchase that stock and Home Depot prices go down, well, you done lost, you know, a significant amount of money on that stock, right? So that's why it's kind of risky. And then you have to also understand and realize, right? Where are you in your life right now as far as investing goes, right? Are you closer to, say, retirement age? Well, if you're closer towards your retirement age, maybe you shouldn't go into stocks that have a lot of, that you can lose a lot of money on those stocks, right? Maybe you want to just go into something that's, you know, calm, something that, you know, you may not make a lot of money. Maybe you put your stocks in popular companies like, say, Coca-Cola, that's been around for centuries. Or, you know, companies like, you know, Facebook. You know, Facebook is not going anywhere anytime soon, right? Or maybe you just want to put your money in the actual stock market as a whole, say in the S&P 500 or the Dow Jones Industrial Average or the NASDAQ, right? You can put your money in those, you know, those kind of ETFs and those stocks, right? So, but again, you have to realize, where are you on your financial journey, right? Are you young like myself that you can take more risk, you know, go for more risk? And, you know, and if you do lose some, you have time to make it up in the future, right? So you definitely have to realize, where are you in your financial journey when it pertains to purchasing stocks, right? So now, again, what you want to do is you want to pick a strategy, pick an educational tool, pick a broker, make a budget, and go. So again, you pick your strategy, right? What, again, I just named all, you know, your strategies, right? Are you going to be a moderate trader? Are you going to be someone that takes a lot of risk? Or are you going to be someone that takes minimal risk, right? Pick an educational tool. Follow, you know, who are you following? You know, follow someone that's a mentor that you know, do trading, say, on a social media platform, Instagram, on, Twitter. Twitter is actually really good when it comes to investing advice. Follow the gurus, there. Or you can find someone that can educate you more as far as when it comes to investing, right? And obviously you pick a broker. Who do you want to use? Do you want to use E-Trade, TD Ameritrade, Webull, et cetera, right? And make a budget. And again, if you can't afford to lose it, don't do it, right? So now, educational tools, again, like I said, mentor, you can do books, social media, take classes, etc. So that's on, stocks as a whole. And I'm going to end right now with what I'm actually doing right now, which is option trading. So you heard of the stock is called stock options, correct? So what the options part of stocks are, in which a lot of people don't really realize or don't invest in it or pay much attention to, is the part that you can actually make a lot of money without actually having to own the stocks, right? And it's very, very volatile. So this is something that, again, you have to realize where you are in your financial journey, right? So what option trading is so options are the right, but not the obligation to buy or sell a certain stock for a certain price for a certain period of time, right? So if I wanted to say purchase, I'll give you an example, TTD stock, right? And I want to purchase an option in that stock, right? I would have to buy 100 shares of a premium, not the stock price, because TTD is probably trading at, a couple $100 a share. So in option trading, there is a premium price, and that premium price is what you're purchasing. So today I purchased a premium price, and that price added up to about $709, right? So I bought 100 contracts of $709, which is $7.09 a share. So I purchased that. Now, what the option is saying is, again, it's an option. So you can either say, okay, do I believe that this stock is going to go up, or do I believe that this stock is going to go down? So now you buy an option. So the two different types of options you can buy is, one is called a call. Call means that you think that, and you believe that the stock price is going to go up. You will buy a call. If you believe that the stock price is going to go down, you'll buy an option. You'll buy a put. I apologize, right? So now I bought a call for TTD, and TTD started at 100. Let me see. Hold on 1 second. I like to give you guys accurate information. All right. So TTD started at 200, and this is their stock price. Their stock prices started at $282 when I purchased it. At the end of the day today, TTD stock went from $282 a share to $294 a share, right? Now, because I purchased those options, if I were to sell my place, right, my option in TTD right now, I would make $735. That's the profit that I would make. And that took me, say, a minute to do. So, and that's why option trading it's very lucrative. But again, if TTD went the opposite way and I paid $709 for this particular option, then again, the most I can lose is $709. But again, you don't want to lose that money, because it's like, man, that's $709 that I'm playing with. But again, that's why you have to do your research when it comes to option trading. And I'm just glad that it went on the positive end. And again, if I were to sell it right now, my profit would be $735. So option trading is, and a lot of people use option trading to kind of hedge what they have now. So for instance, if I had TTD stocks and I know that TTD stocks are going down, I can purchase an option, right? Purchase a put, right? And that put would say, okay, the stock prices is going down. So I own TTD stock. My stock prices is going down. I'm losing money. But if I buy an option and says, and that option says that, okay, this stock price is going down. Well, okay, it's going down on my stock, on the stock end, But on the option end, it's going down, but I'm making money as it's going down. So now I'm secure with my stock, because even though the money I'm losing, I'm gaining it back with the option. So that's what a lot of people do when they hedge their options with their actual stocks that they own, so that they can either take a minimal loss if the market crashes, or, go, or make money, right? So one question that you get a lot is, okay, so what should we be looking at now as far as getting stocks? Well, you have to look at pitfalls. So what are pitfalls? Things that the economy, things that are happening around you that, say, a certain company can fill, right? So for instance, we're in COVID-19, right? So obviously we're looking for a vaccine. So can you imagine if you did your research and you found a company that's actually going to come out with the vaccine for COVID-19, a working vaccine that's approved by the FDA, that company's stock price is going to shoot straight up, right? So pharmaceutical companies, technology companies, right? I'll even give you another one. There's a company that I did some research on, and it's called, hold on one second. Their stock is called EVFM. That's their stock ticker, right? This company just got approved by the FDA for having a birth control gel. So it's a gel that I guess is for birth control purposes, right? So this is huge, right? And I believe that this company at some point is gonna make, because right now they're trading at $5.80 a share. So when they fully go on a marketing campaign and start getting this out, I believe that this company is going to shoot up, right? But I'm not a financial expert, so don't go running out and purchasing, these stocks and doing all this stuff. I'm just letting you know that, that's what I looked into. So that is the end of my presentation. I will turn it over to the moderator.
All right. I have a couple of questions. What's the best platform for beginners when trading?
So the best platform for beginners, I would say, is Robinhood. Robinhood is a very simple platform, and they don't charge fees like how these other platforms like TD Ameritrade, E-Trade, those platforms charges fees. E-Trade, Robinhood is a platform. It's simple to navigate, simple to use, and they don't charge fees. So I would suggest Robinhood, or if you just want to get your feet wet and you have PayPal allows you to buy optional shares, right? So that means that if Amazon is selling for their stock prices over $1,000 a share, and you know that you can't purchase that straight out, well, you can go in there and say, okay, well, today I can only put $10 in. So then you'll buy a fractional share of Amazon for $10, and you can continue to put money until you get that first share. And that's what I did with Tesla. At the time, I didn't have the $225. So I bought fractional shares until I got the full $225.
Okay. Next question. How should I invest in my 401k?
That's a great question. So in your 401k, number one, if your company offers a match, do the match. That's because you're like, if you don't do the match, you're turning away free money. So definitely do the match. A lot of Americans do not even contribute to their workplace retirement plan. And then when they get close to retirement age, it's like, wait, what happened? Well, I'll tell you what happened. You have to get another job because you haven't been saving properly. So number one, contribute to your retirement plan. Number two, once you start setting money aside, you don't see that money comes out of your check. So like Patrina was saying, if you do payroll deductions and have that money sent to, say, your bank account, you don't miss it because you don't really realize that it's really coming out. That's the same thing with your 401k. That money comes out, it goes into your retirement account. And then, after a period of time and you're vested, you can, take that money with you to another company if you do choose so. So that's another thing with your 401k. Lastly, I would say with your 401k, if you're young, do Roth, right? Because again, if your company is going to contribute to your 401k and, match, they're going to match on the traditional side. which means that that money is going in, and you're going to have to pay the taxes on that, right? When you pull that money out. So post-tax. Now the Roth allows you to put money in pre-tax, right? So that money grows, you know, pretty much tax-free until you pull it out. So if you put, if you have $1 and say at your tax rate right now is whatever, that dollar may go in at 80 cents. But guess what? At your retirement, you can pull that dollar out. Now, the good thing about a Roth is it's on your current tax rate, right? So if you're just starting out and you're young and you're just starting out, well, your tax rate isn't as high. So you're not going to pay as much taxes. Now, when you do with your traditional IRA, when you do pull that money out and you have to pay taxes, guess what they're going to hit you with taxes on? Well, it's at the end of your career, which your tax rate is the highest it's ever been, right? So again, contribute to your 401k, look into the Roth as well. You can have both Roth, money going in as Roth and money going in as traditional. But yes, do your 401k.
Can you comment on the 40% stock drop during the COVID, and how do you protect yourself?
So so again, like I said, with the options, options would have helped you protect your investment as far as that goes, right? Because if you would have caught it in time and you know that your stocks are literally plummeting because of the COVID-19, then you could have got into options at that time and you could have hedged that loss, right? But so now the thing is, we didn't predict that the COVID-19 was going to impact the economy like it did. And the reason why I say that, because look at the senators who had their money in the stock market. And then when they went into that meeting and they heard that, oh, you know what, this is going to impact the economy. Let's take our money out, right? Insider trading style. Let's take our money out so that we aren't affected, right? And that left the rest of America to be hit with, you know, this drastic drop. Now, for some reason, the economy is kind of picking up as far as certain sectors, in which it's crazy because if you look at travel, that sector is kind of picking up. And if we're supposed to be social distancing, then why is that sector picking up, right? Another thing to look for when it comes to the stock market is look at, you know, that dude that with, you know, the orange guy that's in the White House. Whatever he says can sway the market. Excuse me. Whatever the chairman of the Federal Reserve says can sway the market, right? These are, and that's why when they have these press conferences, tune in, because if, you know, Trump is saying, okay, you know, we're not doing this with China. We have, you know, all this money coming in with the Federal Reserve. They're going to send a stimulus package to boost the economy. Guess what's going to happen the next day? The stock market is going to open green because everyone's like, okay, well, Trump said it. The Federal Reserve is backing him, so we're good. So, and that's why in this time in which we have a lot of time on our hand, it's beneficial for us to definitely follow these things. Follow, you know, when Trump is addressing the nation, when the chairman of the Federal Reserve is addressing the nation and things of that nature.
All right, thank you. I'm gonna turn it back over to our moderator, Brother Walton.
All right, so we've come to the end of a wonderful program. If you have any last minute questions, please get them into us. But we want to thank our panelists, Brother Devon, who talked to us about unemployment, Sister Patrina, who talked to us about the importance of budgeting, Kamisha, with all of that energy, told us to level up and put it down, and she put it down about the importance of good credit. And of course, Brother Nasiki talked to us about investing during COVID and beyond. You know, so and some other things we took from takeaways from tonight is to, you know, to consider how are you going to take the taxes out of your unemployment benefits if you're doing that. And I know don't double dip because there's some stuff going around. You know, people who are working during COVID may not be in the office but receiving pay, but also filing unemployment, and chances are you're going to get found out. So please, you know, make sure we're mindful of that. Budgeting is not restrictive. It's telling your money where to go. We learned that not to save after spending, but spend after saving, and the importance of understanding your credit. So like someone mentioned, we're putting on this series of events because we believe that it's great information to have for our community. Not only has COVID affected us health-wise, but it's also affecting us financially. And as we begin to open up and go back out, we want to stay important, but also be mindful that we have to continue to monitor our finances, especially when we re-enter the workplace. Again, we will, if we see any more questions, we'll answer them, but we don't see any now. So before we go, I would just like to thank you all for who was on the call, our panelists, our audience. I would like to acknowledge the presence of our district representative, the first district representative, Brother Leonard Bligen, who's on the call with us this evening. And I also like to just acknowledge the hard work of the Social Action Committee, including Brother Bossless Alex Jones, Brother Vice Bossless Ruel Dixon, Brother Keeper of Finance Nasiki Reed, Brother Giggy Martindale, Brother Craig Streeter, Brother Livy Spearman, Brother David Cockrell, and Brother Jordan Johnson. So again, I want to thank you all. This was a wonderful message. It was a wonderful panel. And with that, I will turn it back over to our bossless Brother Alexander Jones.
Thank you, Brother Walton. Did I accidentally email you my notes? Because you just covered everything I was going to cover. So I thank you for that. I just want to again thank the panelists, not just for their expertise and the wealth of knowledge. I had to keep going back to get more paper because I was taking so many notes. But I want to thank the panelists more importantly for their expertise, but also their time. I know it's 6 o'clock at night. You could be with your family, you could be having dinner, but you came on and you uplifted the community, and that's what we're all about. So I want to say thank you personally on behalf of the chapter. And I want to thank you for the attendees for staying on as well. And I'd like to invite you to our next one, which will be June 10th. Please look out. We'll be sending flyers out. Please follow us on social media and so forth. With that being said, I thank again everybody for coming out. And Brother Spearman, if you could just take us out with a word of prayer.
If everyone would bow their heads. Heavenly Father, thank you so much for this information. Thank you for all the people that showed this evening. Thank you, Lord, for our panelists and the wealth of knowledge they possess. In Christ's redeeming sake's name, amen.
Amen. Thank you and good night to everybody.
One thing, brother Boss, I see someone asking for the presenters to just put their information in the chat box. So I see Brother Reed put his in already. Devon put his in already. So if Kamisha and Mrs. Dixon want to take a minute and just drop their information in there so our attendees could have that. All right, I see their information is in there. So once again, on behalf of Brother Bosses, we just want to thank everyone for coming out.
Good night, all.
Thank you. Good night.
Good night. Just a reminder, the Social Action Committee, check your emails, please. We're going to switch over to the other link to just have a quick follow-up meeting.
All right. Good night, all.
Good night, everybody. All right, bros, I'm gonna close it out. I'll see y'all on the other link.